Yeah, let's go. Good morning, everybody. This is the Live Market Open for Wednesday, March 23rd. I'm Yohay Elam of Forex Crunch and Market Movers Podcast, doing the show as usual for FX Street. Hope everybody's doing okay. As usual, we'll talk about the recent developments in markets and events, of course, outside markets that affect markets, various charts and levels in the next 24 hours, and of course, your questions. If you cannot see the chat, please go to the address alongside the screen, tlk.io/fxrate-forex-live-video. I see quite a few in the room. Good morning. So yesterday during the show, we covered the developments around the tragic events in Brussels, the bombings over there, where two blasts in the airport and another in a metro station. Around 30 people were killed, many more injured. It's a big event. It's the capital of the European Union. It happened, the second blast happened close to the European Commission. So this is still an ongoing event. We still have, we had recently a report that the bombers are known to the police, and they're two brothers, and could be one more bomber on the run. Anyway, yesterday it had a big effect on markets. The most affected currency was the British pound. Why the British pound? Because this bombing, even though it did not come from migrants, still raises questions about two things for Brits regarding the EU referendum. First of all, even though it isn't related to migrants, it still raises the question about, everything is confused, is mixed up. And one of the issues on the British referendum is the Brexit referendum is immigration. The second thing, I think many Brits see Europeans, especially Belgium, especially Brussels, sort of the symbol of the European Union, as incompetent as dealing with terror. Anyway, we had safe haven flows yesterday, the yen strengthening, but mostly the pound weakening. Now, as we've seen with similar events in markets, these things don't last too long. It has a big shock at the beginning, but then things subside. So let's look a bit at charts before we move to other stuff. Okay, so in euro dollar, well, we did see it recover from the lows. I put another line right here. And then now this morning we're falling once again, but we didn't see sort of a big crash. The ultimate safe haven currency, dollar yen, it did fall yesterday. We fell to around 111.40, but since then we began climbing. That means a better market mood. We're not happy whatsoever about what happened, but less sort of the attention span is short. Okay, so we had it climb above 112.20. Look how 112.20 works as a very nice separator of ranges. The next line of support, of resistance, sorry, is 112.80, but perhaps it's a bit old. Why did I put 112.80 here? Now let's remove it. It's a bit old. Let's look at 113, okay, on dollar yen. And the pound dollar, here we've seen quite a devastating fall. So yesterday we were trading above 143.65. This line was lost. Then we had a battle over here. Now we're even extending the falls. So every bounce on the pound has been a dead cat bounce. All in all, a fall of around 200 pips over one day, from the highs getting closer to the pre-Fed lows, okay? Next line of support, 141.25, and then 140. Euro dollar, yeah, it's still a few reasons. Of course, bombings happened in the capital of the European Union, but that's not the only reason. The growing chances of a Brexit, of course, also have a negative impact on Europe, okay? Some analysts say it could lead to the disintegration of the European Union, eventually, not immediately, along the road. So that's also perhaps indirect impact, direct and indirect impact, negative impact on the euro. The moves aren't that huge in euro, they're bigger in the pound, okay? So we also had a positive effect on gold yesterday, but this was unwound also quite nicely. So when we had the news breaking out, the price of gold went up, but now it fell back down, especially in the Asian session. But let's get back to currencies. Dollar CAD, we had the release of the Canadian budget. It showed a proposed deficit of 30 billion Canadian dollars, more or less as expected. Most analysts say that it's not expected to shake up things for the Bank of Canada, not expected to push the Bank of Canada to cutting rates. Okay, so we said in the past that the Bank of Canada is waiting for the Canadian budget. As it seems right now, of course, it has to be approved by Parliament, but it seems that the Bank of Canada will be in no rush to cut rates anytime soon. So the Canadian dollar is steady as she goes. Yes, the US dollar is stronger across the board this morning. So we're seeing it also in dollar CAD, but nothing. As you can see, it remains more or less in the same ranges, just under 131. 131.70 remains resistance, 130 support. Aussie dollar, well, now it's sliding with the strengthening of the US dollar, but also the Aussie dollar did recover from the sort of risk-off sentiment triggered by the blasts, and we're basically in the same range. We haven't gone anywhere fast, okay? So just now hugging the 76 level, 76.80 is resistance, 75.60 is support. Okay, Kiwi dollar, more or less the same story, nothing out of New Zealand, sliding a bit this morning, perhaps a little weaker than the Australian dollar, a bit sliding down. Yesterday it was more or less in range. So just now we're seeing it slide towards the 67 level, which works as support. Further support 66.20, resistance at 68.20. Dollar Swiss now moving higher alongside the strengthening of the US dollar this morning. Remember that also the Swiss franc attracts safe haven flows. Moves here 30 pips to the upside, not that bad for this currency. 96.40 remains support. Resistance at 98, moving a bit higher. So the franc is weakening. It's weakening also a little bit against the euro. Well, not so much. More or less in range, 109 to 110. Euro pound, here we can see, remember, the attack happened in Europe, in Brussels, the capital of the EU, but the euro is stronger than sterling. So now we're seeing them both losing a bit to the dollar, so stable against each other. But yesterday, it was quite a clear effect that the pound was weakening more on this tragic event in Brussels, okay? So 78.50 was broken quite clearly. Now we're trading in a very narrow range between 78.80 and 79. Next line of resistance remains 79.30, okay, which was the high level seen back at the end of February. Okay, so all in all, weaker sterling is the big story. Euro yen. So yesterday on the tragic events, the yen, of course, strengthened the euro weekend, but the yen has come around. Yen is now losing also to the US dollar. That means stability against the euro around 126, 125. Despite the breach yesterday, still works as some kind of support, followed by 120. To the upside, we have 127. To the downside, we have 123. Far out. Anyway, Spirit isn't a big mover. A bigger mover is pound yen. We fell very nicely yesterday all the way to support at 158.50. Okay, since then the yen did some catch up and weakened a bit as well, but the pound remains suppressed also against the yen under the 160 level, unable to break back above that. Now trading in this range between 158.50 to 160. Okay. Oil prices yesterday, well, they weakened a bit. Now we're seeing them weaken a bit more. I must say it wasn't really affected by what happened in Brussels. Today we have the crude oil inventories, and this should have a bigger effect. Remember, we have an April 17th meeting in Doha, Qatar, between OPEC and non-OPEC members. Not expecting anything really to come out of there, especially as oil prices are not at emergency levels under $30. But of course, there's still a lot of time until then. Okay, so this is a sort of an overview of the major currencies. Of course, any currency pair you want to return to, or if you want to ask a question about another currency pair, questions are welcome. Let's talk about other events except the Brussels bombings. We had US primaries overnight in 3 states for the Democrats, 2 for the Republicans. Quite mixed results, I would say, but basically Trump and Clinton remain in the lead. So Trump won Arizona. That's a winner takes it all state. Significant, clear win over there. Ted Cruz did win Utah, a more religious state. That's, of course, Arizona has more delegates, if I'm not mistaken. Clinton in the Democratic Party won Arizona. Sanders won Utah and Idaho. So it's quite balanced there. Of course, Clinton has the lead. No significant fallout from these primaries so far. Basically, we have almost every Tuesday and sometimes on weekends we have primaries, and it's going to be an ongoing story. More importantly for markets, for the US dollar, there's a reason why the US dollar is rising. We had more hawkish comments. The more surprising one came from Charlie Evans, the president of the Chicago Fed, that seemed, he's usually very, very dovish, very careful, very cautious, sees the glass half empty. This time he seemed more open to further rate hikes. Harker of the Philadelphia Fed, which is more of a hawk, he would like more rate hikes. He would like the Fed to get on with it, as he said. So it's there wasn't a big, the bigger surprise came from Evans, and more importantly, it also came on the background of what we had earlier in the week. We had John Williams of the San Francisco Fed, Lacker and Lockhart, all three mentioning that April is a possibility. Okay, there is a rate decision in April. It's with no press conference, no new forecasts, and we still expect, according to bond markets, no rate hike over there. But it's according to these members, it's still open, and they would like to raise rates. This is a big shift, at least from these members, from the Fed decision that was extremely dovish just 1 week ago. Okay, so that's another reason for for the stronger US dollar. Sort of nothing, I would say. They weren't huge comments yesterday, but they accumulate from Monday as well. So it's all together. Of course, all these members are not the key members. Now let's look at probabilities for, let's begin with April. We're seeing an increase for chances of rate hike in April, very small, from 7% to 14%. You can say double, but it's still nothing. Markets still don't expect a hike in April. More importantly, from June, there was a bit more than 50% for rate hike before the Fed decision. Then it fell to around 30-40% because we had an extremely dovish sentiment from the Fed. Now it's back to nearly 50-50. Okay, so at least according to bond markets, there's a growing chance of rate hike in June. In June, there's a press conference, new forecast, everything. Okay, I see a few comments here. Question, can you trade off the TradingView platform, or is it only a charting package? I think it's only a charting package, but I'm not sure about that. So I'll have to check it out with them. On their website, I'm sure they have all the information. Comment here from Jax. Yeah, you're really into US politics. I think it's fascinating. Yeah, you can call it cartoons. It's a great, great reality show. And it eventually will have an impact on all the world because it's the world's #1 country. Donald Trump or Hillary Clinton. These are the leaders in both parties, but there's still a chance that it'll be Ted Cruz or Bernie Sanders. The races end on June 7th. We should have a better picture in the middle of April with primaries in New York, for example, but California is voting only in June. So I think it's still an open contest. Clinton is clearly, or John Kasich in the Republican Party, are more mainstream, normal leaders, if you wish. Donald Trump is a racist, extreme, and quite dangerous. Bernie Sanders is also sort of an outsider, but at least not racist. This self-described socialist. This is a very short brief. For markets don't want anybody extreme. They don't want Sanders and definitely not Trump. Okay. Now in the U.S. election system, in the U.S. Constitution, there are many checks and balances. The president can't do everything on his own, her own. There's also there are also two houses of parliament, checks and balances. Everything needs to undergo scrutiny. So I don't think it's going to be anything really extreme, but the sentiment does matter. Markets prefer continuation in general. Clinton is continuation. Kasich, which I don't think has any chances anymore, or Rubio that already quit, they're a continuation. The others are unknown. Markets just don't like uncertainty, especially if it's anti-trade, which is common to both Trump and Sanders. Hillary more dangerous? I don't think so, especially, I mean, for markets at least, she doesn't seem dangerous because it's continuity of I mean, she's a devil, we know, like when I talk about the British referendum, they think that Brits will eventually vote to stay in, despite what happened yesterday, despite many other things. It's because staying with the devil, you know, is better for markets than going for someone new. But we'll see about that. At the moment, I'm following this, I'm mentioning this. It takes the headlines. It doesn't affect markets so much. If there's a growing chance that Trump can win, I think it'll have a bigger effect on markets. Okay, but so far, it's just becoming more scary, but nothing that will move markets. Okay, will euro dollar hit 110 this week? I don't know. Maybe yes, maybe no. Okay. We don't have any big market moving events, I think, for the euro. We might see the US dollar strengthening, so that could lead euro dollar down to 110, but I think the moves in euro dollar are quite limited. Maybe it is going down this week, but nothing extreme. Okay, so it fell from the highs. Yeah, we're already 150 pips down, or even more from the post-Fed highs. We could fall even more, but I see before 110, I see a hurdle at 110.70, which was the post-Draghi high and the pre-Fed low, more or less. Okay, so I would first look for a breakout under 110, and we're still far off. Sorry, 110.70. We're still far off currently at 111.90. The low for today has been 111.80. I see much bigger moves in the pound still continuing, and less in the euro. Okay, comment here. Trump is just loud. He may be an idiot, but not as dangerous as Clinton. I don't agree. I think he's very dangerous. You just never know what he's going to do. And his style is very violent. So I think he is dangerous. Anyway, we have 3 more months of primaries. And then from now until November, it's nearly 7 months, right? So quite a long time. Good morning, everybody. Let's talk about other events we had yesterday and mostly talk about what we have today. So I talked about the events we had yesterday, more hawkish talk from the Fed, not from Yellen, number 1, not from Fisher, number 2, or from Dudley, number 3, but still a shift. Okay, what else did we have yesterday in terms of data? Remember data yesterday? Thank you, Andy. I'll consider running for US presidency, maybe in 2036. Just kidding. Anyway, yesterday we had data coming out in Germany. In general, important surveys, but first of all, they came out mixed. Secondly, they came on the background just a few hours after the news broke out from Brussels, so they didn't have such a big effect. to summarize what we had, the most important figure, the EFO1, came out better than expected, showed better confidence. Also, the confidence came out better than expected, so that's good news. The ZOO figure, which is less important, but usually comes out before the EFO and has more impact. This time it came at the same time. It was a bit more mixed, it came out a bit under expectations. We also yesterday had PMIs yesterday, preliminary purchasing managers indices for the month of March. They came out quite mixed. Okay, nothing to write home about. Manufacturing is still struggling in the old continent. Services is doing better. Everything we already knew, nothing really new. Okay. Another hit for the pound came from UK inflation. It missed. Instead of rising to 0.4, it missed at 0.3. Again, played second fiddle to the events in Brussels and the impact on a Brexit vote, but another sort of something negative for the pound. So you said pound has started off strong this morning and the yen is the weakest. Well, let's take another look at that. Well, we see in the last 20 minutes or so, the pound is climbing off the lows. That's 18 pips higher, but I don't see it as strong. I see it as weakening throughout the Asian session, continuing to grind to the downside. Every bounce is a dead cat bounce. The yen is certainly weaker. The yen is more or less the same. According to the percentage points I see here in TradingView, both are moving around 0.15, 0.16%. Okay, the yen is weaker also against the dollar. The US dollar is stronger across the board. The euro is probably the weakest, and also the kiwi. Anyway, the yen is weaker this morning. Yeah, with this I certainly agree. We talked about the Canadian budget. It includes a big deficit, but as expected, 30 billion Canadian dollars. The Bank of Canada is seen on hold because the government is doing the stimulative work for it. Okay. What do we have today on the agenda? Today's a lighter day in terms of economic indicators. Events for Brussels will continue moving markets. More news over there. The person that created the bomb is still on the run, still at large. Yeah. And there is a connection between the Brussels attacks and the Paris attacks. Doesn't sound that surprising. Anyway, this story will still run, still have an impact. And in terms of economic indicators, today we have a speech by the head of the German Central Bank, Jens Weidmann, at 12:40 GMT. More importantly, another Fed speaker, James Bullard. He speaks a lot. He actually already talked in the last few days. He's going to be probably positive, bullish. I'm not sure it's going to have an impact because it's not going to be new. It's not like Evans, the dove, coming out slightly hawkish. More importantly, in the United States, we have the U.S. new home sales. Remember, when a new home is sold, it triggers economic activity that is wider than when an existing home is sold. So this could have more of an impact than the existing home sales we had on Monday. Belgian business climate has a small impact, but it sort of reflects also what happens in other countries. For the market mood, we'll have the crude oil inventories. Of course, the biggest impact is on the Canadian dollar, but also impacts the market mood currently with WTI and Brent around 41. Let's see if they continue the rise above 42 or slide towards 40. Don't watch only crude, but also the, let's change it here to oil inventories in general, because there's also gasoline, distillates, and also the level of production, which finally began ticking down in the US. But with the rise in oil prices, shale producers in the US can easily ramp up production. And last but not least, for those trading the Kiwi, we have trade balance at 9:45. Let's look a bit about the figures. At the figures we're expecting today, not only talk about them in general. So new home sales, perhaps the biggest market mover of the day, is expected to rise just a bit from 0.494 or 494,000 annualized to 510 annualized, a rise of 3.2%. And trade balance in New Zealand, yeah, we don't have expectations. Last time it was a surprisingly positive surplus, okay? So relatively light day in terms of indicators, but oil prices, more events from Brussels and other stuff could certainly have an impact. Okay. Any questions? Let's see if I didn't talk about anything worth mentioning this morning. No. Let's talk while I wait for your questions. Just about events we had this week. So I mentioned late last week on Friday that we'll have more echoes from the Fed decision. I was expecting more analysis of the Fed dovishness. Since then, we had some relatively hawkish Fed speak, and we already see the impact, a positive impact on the US dollar, a positive impact on rate hike expectations for April, and more importantly for June. Yesterday, everything was, of course, marred by the Brussels bombings, which, of course, was not expected. The German surveys were quite busy, but they were overshadowed. UK inflation, it added to the negative feel on the pound, and I think it'll, when the dust settles, it'll also continue to have a negative impact. Tomorrow, well, inventories. Thursday, tomorrow is a busy day with UK retail sales. I guess they usually have an impact. Durable goods orders. Let's see if the Fed was right to talk about investment as soft. The US jobless claims. And on Friday, it's a holiday in many countries, but we still have a very important figure coming on thin liquidity. That's the US GDP release, the final read for Q4. A bit stale, a bit old, right? But still has an impact, especially when it comes on thin liquidity. Okay, the question here, DXY looks like it will finally find some resistance to its little bullish trend. What a potential break of the blue support line. Thanks, Sinatra. Okay, let's share it with everybody here on the screen. So yeah, as I see from your chart, the dollar index is currently on the rise, right? Going up this trend, okay? That began, when did this begin? Yeah, a few days ago. What are we seeing? This is, okay. Anyway, we're rising on this chart, about to meet the downtrend resistance line that began with a nice confluence over there in the past. Yeah, let's see if this this continues. If this triangle, this wedge that is closing, how it will affect the US dollar, where will we see it on also the technical lines. So 96.03 is the level to watch, right? That's where these lines meet. Anyway, we had quite a nice recovery, gradual and slow recovery on on the dollar index, on the dollar in general. Okay, next lines you put here are 96.50 and perhaps more importantly 97.20, right? That I see. Anyway, thanks for sharing. The low point has been at the 94 handle. Okay, a comment here from Jax. Draghi, the Fed, the rate news yesterday is tragedy. Think the market is just a bit tired and needs a day off. Everybody needs a day off, I also agree. But I think market volatility is quite nice. Let's see if it continues. Okay. Any other questions, comments? Euro dollar, meanwhile, stabilizing, getting closer to 112. No, also the pound is a bit higher. Some kind of stability, nothing earth-shattering. Perhaps I should take back that comment about high volatility. At least this morning, we aren't seeing anything extreme. More questions? Let's remind you why I said that the Fed was extremely dovish last week. So, no, that's the ECB, which delivered a huge package. I have too many old slides here. Anyway, the Fed. Very quiet London Open. Yeah. We had volatility in the past week, but today we have a quiet London Open, digesting yesterday's events. Relatively quiet day in terms of indicators. Tomorrow it's going to get busier. And in many countries, tomorrow is the last day of the week, so last business day of the week, so it could be, I'm sure tomorrow will be more exciting, but you never know what happens in markets, who releases what comment, what happens in the world, so maybe the rest of the week off, have no new trade ideas for the week. Maybe the market is just exhausted. Yeah, but we are seeing some movements in markets. We are seeing a stronger US dollar, and also against the Japanese yen, which does not always happen. Usually the trend against the yen is different than the trend against others. We're seeing a big fall of the pound. I don't know if it'll continue or if we'll have a bounce, but the market was not, at least until recent hours, the market was not exhausted in selling the pound. Okay, from the Sunday gap until a few hours ago when it reached a new low of 141.62. So let's see how things pan out. Okay, maybe while we wait more questions, again, let's mention the Fed's dovishness, which has been curbed by the recent hawkishness seen by the Fed speak. Anyway, the dot plot showed only 2 rate hikes in 2016 and also a lower path for rates in the future. They're still worried about global developments, despite the fact that China has done a lot to ease markets, cutting the RRR, pledging a growth rate of 6.5, despite the Bank of Japan introducing negative rates, despite the ECB throwing the kitchen sink. So it was quite surprising hearing the high level of worry from the Fed. Inflation forecasts were slashed on the same day that actual data showed a rise in inflation in the United States. They talked about soft business investment. We'll see if they knew something we didn't tomorrow in the durables goods orders and also soft exports. And there was one hawkish dissenter who probably didn't get the memo about the dovishness. Well, she's a known hawk, George Ether of the Kansas Fed. The US dollar crashed, and since then, at least since the beginning of this week, it has begun its path of recovery. Okay. Anyway, let's look again at charts. I think, as I said, also many times in recent weeks, any feedback on the show is welcome. We're soon moving the clocks here in Europe once again, this weekend actually, to daylight savings time. If any of you would like a different hour for the show, we'll listen and perhaps move the time, I don't know. Feedback on the length of the show, on the topics covered, For me, I think the most important part is the questions, the interaction. But yeah, anyway, any feedback is welcome directly to me, to Mauricio, to Adinda. Yeah. Anyway, let's look again at the chart, see if we have any developments, or if markets are, as all of you describe, are tired. Yeah, 141.86, nothing moving really fast this morning. Euro dollar just under 112, bouncing from the lows. Also here, not going anywhere fast. Okay, some general strength of the US dollar, but nothing really big. Perhaps the bigger market mover is the Kiwi dollar. I see in terms of percentage points, it's 0.44% down. In terms of pips, it's just 30 pips. It's not huge either, right? Let's draw new lines on oil prices. I put there 41.75, the previous high. Also 42 could work as resistance, this kind of range. The 40 level is support. It's WTI crude oil. I think also Brent oil is around the same levels. Yeah. Okay. If we talked about one rate hike, according to bond markets, we're expecting one rate hike currently in July. June, it's a bit mixed. Currently, a tendency for no rate hike. Thank you very much, Jake. Says that the start time, duration, and particularly the content structure, all good. Okay, thank you very much. Also, positive and negative feedback are all welcome. July, one rate hike. September, still one rate hike. And maybe a second rate hike in December, more likely in February. Okay, another comment here. What is really happening with the Fed? It's uncertain about hawkish or dovish sentiment. With the Fed, yeah, it's uncertain. We all knew that they would not raise rates 4 times in 2016, okay? When they showed that in the dot plot, nobody believed them. And it wasn't a big surprise that they cut the dot plot to only 2 rate hikes this year. What was surprising was the cut in forecasts for inflation and investment. The sentiment in general, the description of the global economy is so dark. That was surprising, but it went. Now they're a bit backtracking on that. Maybe they wanted just a weaker dollar. Maybe now that it's over, they're moving on. I don't know. Anyway, we just need to note that it moves markets. Okay, 8 GMT is the best time. It's the London Open. Okay, 8 GMT currently is 8 in London and 9 here in Europe. From Sunday, means from next week, it'll be 8 GMT will be 9 in London and 10 in Europe. So I guess you mean leave it at the same time, which I mean with the London Open, which means 8 in London, 9 in Europe, which means 7 GMT from next week. Anyway, yeah, momentum running slow on stocks indexes, divergence starting to appear intraday. Yeah, when we have markets slowing down, we don't have all currencies moving in the same direction. I mean, against the US dollar or clear trends, we have each to his own. Big profit taking ahead of the Easter break. Currently, I don't see any kind of profit taking, but we might see that tomorrow because most of Europe is on holiday. And I think also Canada. but the United States is not on holiday, and Japan is not on holiday. It's not like Christmas. It's not such an important. I mean, it is an important holiday, but for markets, but not like Christmas. Always keep to the London Open. They need to get rid of the dots. It's just a pain. Yeah, many blame the Fed for providing too much information. That is just confusing for markets. But some say the Fed is not transparent, so they have this communication dilemma. Some criticize them for doing that. Some, yeah. Anyway, time for the wrap up. This is the wrap up for the live market open for Wednesday, March 23rd. Markets are still affected by the Brussels bombings. News coming out regarding the manhunt still have an impact. The biggest effect yesterday, and I think also today, is on the pound. This raises the chances of a Brexit because of its the perceived connection of the bombings with immigration, or the perceived incompetence of the European authorities, in the eyes of some Brits, to deal with terrorism. Anyway, the pound has the biggest negative impact. US primaries were quite mixed. Currently no effect on markets. What did affect markets is a few more relatively hawkish comments from Fed officials, in contrast to the dovishness seen last week. Most importantly from Charlie Evans, usually a dove, now going hawkish, open to rate hikes, and Harker, which is a hawk, and the name also sounds a bit similar, would like the Fed to get on with it. Anyway, this is positive for the US dollar, of course. In terms of data yesterday, we had mixed surveys. The most important one from Germany, IFO, was better than expected. No market impact because it coincided with the breaking news from Brussels. UK inflation added to the misery of the pound with the miss at 0.3. The US market manufacturing PMI came out as expected. The Canadian budget is quite stimulative, more or less as expected. Should leave the Bank of Canada on hold. That means it's positive in the medium term for the Canadian dollar. Okay. If we look at the charts, let's begin with euro dollar. It's still pressure to the downside, mostly because of the strength of the US dollar and a bit because of the impact of Brussels, including the impact that Europe could suffer a Brexit. Anyway, we reached a low of 111.80, grinding down, very, very slow move. 112.15 is still some kind of resistance, but not as strong as it used to be. Lower support is 110.70. Pound dollar dropped quite a lot, fell to a low of 141.62. Further support 141.25, and then 140.50 and 140. On the top side, we have 142.40 and 142.40 and 143.65. Let's erase this line. Dollar yen recovering, breaking back above 112.20 on the strength of the US dollar, and yesterday it attracted safe haven flows, but not anymore. Dollar CAD, Canadian dollar, now showing some strength, but basically well within the range, supported by the budget of the Canadian government. 130, the round number, is support, resistance at 131.70. Sorry, the Australian dollar now bouncing within the range, relatively resilient, not losing too much ground. Yesterday it did suffer a bit, but rising. 76.80 resistance, 75.60 support. Kiwi dollar, in comparison to others, it's suffering more. 67 is support, 68.20 is resistance. What do we have today on the agenda? Let's talk about this at the wrap-up as well. Very quiet morning in terms of indicators or planned events, but we have a speech from Jens Weidmann of the Bundesbank at 20 to 1 GMT. At 1 GMT, we have a speech from James Bullard of the Fed. He's a known bull, he's a known hawk, so it might be upbeat, and that shouldn't impact markets because it will not be news. The most important release today is at 2 GMT, US new home sales. A small advance is expected, but we had a disappointment earlier this week from the existing home sales. Also, Belgian business climate might have some minor impact on the euro. Crude oil inventories and also distillate oil inventories, gasoline inventories could impact the Canadian dollar and also the market mood. Currently, oil is on high ground in comparison to what we've seen just in the middle of February. And for those trading the Kiwi, New Zealand trade balance that surprised with a surplus is going to move the Kiwi at night. Okay. So thank you very much, everybody, for coming, for the great questions. And yeah, stay safe wherever you are. Safe day in the markets as well. We'll be here tomorrow. Tomorrow is a busier day. And yeah, that's it. So thank you all, and bye-bye.